Hey market friends. Welcome back to Will of the Market. Today we're talking about a heavyweight in the AI infrastructure world. Supermicro, ticker SMCI. Think Iron Man meets Silicon Valley, hardware, high stakes, and headline-making moves. We'll unpack what Supermicro does, how it stacks up against peers, and what the market really thinks going into 2025. Strap in. What Supermicro does. Supermicro was once seen mostly as a niche server maker, but that story changed fast. Now, the company brands itself as an AI infrastructure powerhouse. They build servers, storage systems, edge computing gear, and deploy cutting-edge cooling solutions like liquid cooling to support high-density AI workloads. The demand driver? Think the Matrix, massive AI models, gigantic data centers, compute-heavy workloads. Supermicro has deep partnerships with giants like NVIDIA, AMD, and Intel to build systems tuned to the newest GPU platforms. Recently, analysts have flagged that over 70% of SMCI's revenue comes from AI platform servers. That's a staggering pivot from traditional enterprise servers and a clear bet on the future. In short, Supermicro wants to be the foundation under the whole AI boom. How SMCI compares to its peers. It's not all fast lanes and green screens. SMCI faces real competition and structural challenges. Peers. Major server and infrastructure providers like Dell, Hewlett-Packard Enterprise, HPE, Lenovo, and other AI-focused OEMs. The difference? They offer broader ecosystems and more established supply chains. Strengths. Nimble, purpose-built servers. Modular designs and building block architecture let clients tailor systems for AI, cloud, edge, or high-performance workloads. Liquid cooling and energy efficiency. Their cooling tech reduces power usage, a big plus when renting expensive data center real estate. AI-first focus. Unlike traditional server makers, SMCI is doubling down on AI infrastructure. That specialized focus could pay off big if AI demand stays hot. Challenges, risks. Financial and governance issues. SMCI's weaker internal financial controls, delayed filings, and a past auditor resignation have raised red flags. Margin pressure. Despite growth, profit margins have slipped. Lower gross margins show SMCI might be sacrificing margin to win deals, a risky long-term game. Competition and pricing pressure. Big hardware giants have scale, supply chain strength, and global distribution that can undercut SMCI's niche pricing. So it's a high-risk, high-reward setup, a David versus Goliath fight in the AI hardware arena. What investors are saying? Bullish signals. SMCI's AI server demand is attracting serious institutional attention. Analysts at firms like TipRanks have highlighted scalable production efficiency and strong GPU burning workloads from Supermicro as key positives. Some see SMCI as a picks and shovels stock for AI, a way to benefit from the boom without speculating on individual models. But it's not a one-way street. Bearish signals, governance concerns remain. The company has a long history of internal control weaknesses that make investors wary. Margins under pressure and revised guidance downward. Revenue guidance got cut recently, which raised doubts and triggered a 10–12% stock drop. Volatility and execution risk. With high exposure to AI infrastructure demand cycles, SMC's stock is a wild ride, not for the faint of heart. Reddit and retail investor threads echo this divide. Some users say SMCI is undervalued and a long-term play if its new AMD server is a hit. Others worry about unsold H100 inventory and overly optimistic guidance. So, the crowd is split like Game of Thrones' House of Cards, bold believers versus skeptical realists. Conclusion. My take. If SMCI were a character in the Matrix, it'd be Neo near the end. Powerful, disruptive, but the path forward is still uncertain. The AI wave and liquid cooling innovations give it a compelling narrative. But financial clouds, execution risk, and fierce competition make it a high volatility stock. A place for bold moves, not safe havens. My verdict. SMCI is a strategic, high-risk play, ideal for investors who believe in AI infrastructure long-term and can stomach drawdowns. It's not for conservative income-focused investors. If this video helped, hit like, subscribe, and drop SMCI in the comments if you want a deep dive versus Dell, HPE, and other AI server competitors. Until next trade, may your gains be heavy, your cooling efficient, and your market instincts sharp.